Hey, what's going on YouTube? Welcome back to another YouTube video. And on today's video, I'm gonna go ahead and jump into a new change that has happened to the stock market that's absolutely gonna change everything for future generation traders, brand new beginners. If you're looking to get started in the stock market, taking your first option trades, the option trading community has just changed forever. And this is a long awaited change that opened the door for so many small account beginners, people that work hard for their money, 9 to 5, earners that, have to trade hours of their time for dollars, and this is very important because now more than ever can you get started with as little as $100. And yeah, the pattern day trading removal here, as you guys see it be in front of me, I'm gonna bring it up on June 4th. The option trading community and the stock market itself, as we know it, changed forever. The pattern day trading rule is eliminated on June 4th, 2026, removing the 25,000 minimum equity requirement to trade account restrictions, replaced by a real-time risk-based intraday margin system. Pattern day trade designation removed. Accounts will no longer be flagged as pattern day traders and day trades are no longer counted. 25,000 minimum equity eliminated. Previous requirement for an active day trading is replaced by the standard margin account minimum of $2,000 or enough to avoid a margin call. Intraday margin system. Brokers calculate buying power dynamically based on real-time margin excess reflecting actual market exposure rather than a fixed threshold. So this kind of breaks down exactly what has been a big problem for even me myself for the vast majority of my trading career. When I first got started, like 18, 19 years old, I didn't have $25,000 to start trading with. I was working at Amazon, I was working at Chipotle, I was working roofing and construction, I was barely making my first couple grand. So $25,000 was a tough mountain to climb. So now, this is taken off the table. Yes, it says there's a 2,000 minimum requirement, but I have seen beginners that have accounts, valued at $200, $300, new members. We get them approved for option trading and they're ready to start trading. What does this mean more specifically? So let me break down to you guys how things were before. If you didn't have $25,000 before, and you were trading on, there's two different types of account types. There's a cash account, which is your own money, and the way this works was you would be able to take an option contract and you can open it in the same day and close it in the same day. But since you're on a cash account, that capital that you expose to the markets, whether you made profit or lost money, that money would be withheld. Robinhood would have to transact it, run it through its system, verify everything, both the buying and the selling, and then the following trading day you'd get your capital back. But now things have changed. So there's two different types of account types. The second account type is called a margin account. A margin account is an account where Robinhood immediately credits the account with, usually it was around $25,000, and you wouldn't necessarily have to trade with their money, but the capital that you were releasing. Let's say I have $500 of my own money. Well, if I went ahead and went and exposed $500, and let's say I turned $500 into $600, I'd get that money instantly. I had to get my $500 in capital and my $100 in profit instantly as soon as I close the trade because my account has a $25,000 credit. Now, if I lose my $500, that's it. I just lost my $500. But since I don't have $25,000 and I opened a trade in the same trading day, which is 6:30 a.m. Pacific Standard Time to 1 p.m. Pacific Standard Time, that is counted as a day trade. And this, without a $25,000 account or portfolio value, it would flag me as a pattern day trader. So Robinhood, how we used to bypass this is we'd be able to take 3 day trades and then we'd receive a pattern day trading warning by the time we get the 4th one. But we wouldn't push it to the 4th. We'll take 3 day trades and then switch to a cash account. And then remember, any capital that we'd expose, we'd have to wait till the following day. So this really impacted my trading psychology. It made me a lot more, I guess you can say, conservative, a lot more patient with taking entries because I knew I wouldn't see the capital until the following day. So this was a really big impact because many traders, not having that $25,000 limit, sometimes, hey, they want to either buy or sell or continue taking multiple trades throughout the day rather than just the 1 or 2 that we were limited to. So now this is completely scratched. Now everyone has access to that $25,000 cushion. It doesn't mean that, hey, you lose $500 and then you have $25,000 to borrow from Robinhood. No, they just add a little bit of a cushion that, hey, if you have your own money, you make profits, cool, we'll pay you out We'll transact it. We'll take the profits from later on once you process the deal, but hey, you have access to your money. And we're keeping a record of everything that you make and lose, and it's gonna be tracked live. So now you get your capital back. And why is this good? Why is this so important? Why is this so big? Because realistically, to be able to trade options back then, you'd only be able to take 1 or 2 trades. Now you can buy, take your profits at 20, 30%. Hey, catch puts on the way down. And let me open up a trading view chart so you guys can get an idea of how this works. So if I were to go ahead and let's say try to trade something like Amazon, right? On a margin account, I now have the ability to trade something like this. Let me go ahead and press relay. Okay, so look. Let me slow this thing down. So on a margin account, before a cash account, I'd be able to trade only like this. Let me speed that up. I'd have to take, let me see, hold on, it's a little bit quick right here. Let's see, once we hit that support. Okay, let me see, we hit that support level, I'll enter a buy, right? Boom, boom, boom. Wait for that support line to maintain itself. Bam, 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 wait for it, give it some time. And then as soon as it reaches that, let's see, can we get it first try? Go for that resistance right there, come on. I just need to be a little bit quicker than that. Okay, there, now we hit our resistance, right? I can close that trade, boom, I took my profits, right? But now, let's see if we can touch that resistance again. Okay, now that I'm at that resistance, well, it kind of cut me off a little bit there, but now that I'm at that resistance, with a cash account, I wouldn't see the money that I just made or that I just released into the market until tomorrow. With a margin account and this pattern day trading removal gone, guess what? Now I could take that $63 I just made in profit, add it to the initial capital that I exposed, and I could take puts. And now when I take puts, boom, 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 let her fall down back down to support, boom. I'll take that 42, well, now $67. And then once I'm at support again, I can enter buys and then wait for it to go back up towards resistance. And then I take that profit now. Boom. You see how this is game changing? Where now you can go up, down, trade that volatility, that range, without having to be limited to seeing your money until the following day. And that's absolutely game changing. Before, you could only take that one trade, and that money that you've seen, you better have more in your account to continue trading for the rest of the day. Because if you don't, you're done for the day. So you really had to make your trades count. And now, as this is gone, now individuals can place more trades and potentially increase their profits substantially. So I really like that they did this, but there's a really big component to how this can impact someone's trading psychology significantly. And coming from an individual that's been trading on a cash account for the last maybe year and a half, I can tell you it's a significant change. And I'll make another video on it the following next day. On the next video, I'll share with you guys exactly how to think about, trading on a margin account, how to make your psychology adapt to this ability to sell and buy back in. Because some people want to sell their losers immediately and it will just catch a reversal. Some people want to take puts when things are going up and cash out those sellers immediately, and they really don't have no patience with their trades anymore. So there's a really big component to one's trading psychology that I really want to jump into, because it can lead to a big downward effect in your trading. You can run into over trading, you can run into revenge trading. So in the next video, I'll go ahead and run into you guys how to avoid all these and avoid these beginner mistakes, but learn how to use this tool properly. So that's the change that happened in the stock market, and it's absolutely game changing. And now more than ever, can anyone get started? So how I recommend you guys get started with this new change is starting with a small account. So a small account, us as traders know them as small account challenges. So let me go ahead and open up my Robinhood, because I'm gonna go ahead and start one with you guys. So I want to document this for the YouTube channel, and this is gonna be my small account challenge, trying to turn $100 into $1,000. So I did this last week. I got hit pretty hard, but I was able to turn, let's see if we could get it, June 15th to June 11th. So in 4 days, we went from $369 all the way to a peak of $1,993. And then after that, I got extremely aggressive and we lost it. Now I'm down $9,000 on the month. But starting this from scratch, I do have more capital that I could allocate to the markets to try to potentially make all that 10K back. but I looked at this as an opportunity to regulate my emotions and practice more discipline and literally lead by example. Help individuals understand that you don't need a lot of money to get started with trading, and as long as you have the right skill set, just like you see me trade Amazon pullback off of resistance and now the reversal off of support, now you can see the skill set is more important than how much money you have. So I am going to be taking on this small account challenge, and I'm going to be sharing it with you guys, the journey, every single trade. I'm going to do my best to document every single trade, just like I am recording this video, sharing my screen in front of me, and breaking down every single entry and exit until we turn $100 into $1,000. So I recommend you guys get started with doing this, something similar, because a small account will allow you to learn. It doesn't really impact your emotions too much. Now let's go ahead and put this into a scenario so you guys get a better understanding. So I have individuals that are very successful business owners. They make a lot of money. Individuals that have a really good career already, they make a lot of money. And they oftentimes want to enter the market trading with multiple hundreds of dollars. And I don't recommend you do this. Why? Because when you do this, your emotions are heightened. Meaning that if you take a trade with $1,000, and every 10% is costing you $100, well, some individuals aren't adapted to seeing money grow or go away that quickly. You know, if you take a 30–40% loss on $1,000, there goes $300, $400. For some people, that's almost a whole day of work. So taking that into consideration, that emotional impact to seeing your money grow and come down, it heightens your decision making, your emotions during the trade, and clouds your ability to be in a learning environment. Now you're more in a hectic kind of panic environment because your money's going up and down so quick. So you want to escape that. You want to, hey, I kind of say like you want to play with money that you can literally almost burn with literally a lighter, and you won't care about it. So I know $100 is still not, you know, the cheapest, but I think it's a great start to challenge yourself and allow you to be able to purchase contracts, because these contracts aren't necessarily cheap. But the best approach that you guys want to do with these is trading your 0-day expiration contracts. So ETFs like SPY, QQQ, and IWM. That was the problem there. IWM have 0-day expiration contracts. So tomorrow, trading day, June 23rd, these contracts will be available to me. And as you can see, some contracts trading near the money are $295, currently going for $377. But now, if we look at the simulated return, they're going for $377 because that's what they are valued at yesterday's market close or today's market close. But now theta has happened. We're already going to work into now currently 12:30, so 1 a.m., 2 a.m., 3 a.m., 4 a.m., 5 a.m. to 6:30. These contracts are losing value because of theta. So even right now at 12:30, this contract is currently valued at $84. So that allows you to, hey, start trading with that $100. And that's what you want to use. These ETFs oftentimes are going to be the ones that have that low capital entry for contracts. So using ETFs like QQQ, SPY, and IWM, they're going to have those low cost contracts that will allow you to deploy this $100 and potentially make a really generous return. Let me go ahead and explain this how. So QQQ puts, let's go ahead and look at this contract right here. This contract right here in front of me at 721 put, right, was going for $42 today at market close. But now let's look at the after hours move. That's $42. You could have bought 2 of them. That would have been $84 with your $100, right? Now look at what they're worth. Simulate returns. They're currently going for $300 each. That was a 600% return in just one day. And you spent less than $100. And now since you bought 2 of them for $84, right, you would have made $600 in profit. Well, $600 in total. And we do $600 minus 84, you have $516 in profit. So you turned $84 into $516. And that's how you introduce yourself to options. You can get started with as little as $100. But now, the biggest part is understanding your technical analysis. You know, this is where you really want to, hey, yeah, the money looks great, the potential is amazing, don't get me wrong, but there's also a way bigger skill set that you want to get better at. using these charts, learning how to adapt to them and use them in your favor to actually time your entries. Just like you see me trade Amazon earlier, it's how you want to trade these ETFs. So you find, your contracts that are near the money. If you guys haven't watched my beginners options video, intro to options for beginners video, that's going to help you guys understand a little bit about in the money, out the money, and at the money contract strike prices. So, like if I were to go back over here and replay mode this, obviously we're below support, and I, kind of seen the chart already. So I'll enter my buys, boom, 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 let her play out. Keep on going, boom. Let's see, can we get that resistance one more time? Bow. That right there, take out my 197, let her come back down. Boom, 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 boom. Hit that point of support again. Enter my buys one more time. Boom, 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 boom. Let her go to that resistance one more time. Time that right there. Take my 105. And that right there is using technical analysis to time your entries. You're entering near or below support, and you're selling at resistance. Why? Because you already built up your range. Similar to as if you were trading this range. There's a support level and there's a resistance level. Support's usually going to be at the bottom where you see price hit, come up, price hit, come up, price hit, come up, price hit, come up. And then you have resistance where price comes down, and continues to reject coming down. And that's how you adapt to these ranges. There's range 1, you have range 2. And trading these ranges with these low capital, low cost contracts can help you make multiple trades leading to a profitable return. So it looks very easy to do in replay mode, right? Once you see the trading day, but it's a lot harder to do in person. So tomorrow, I'm gonna start the challenge and taking $100 into $1,000, and then hopefully turning $1,000 into $10,000 for the sake of the YouTube channel. And let's see if I can do it, and hopefully encourage you guys to get started with trading options before 2026 ends, and showing you guys that the knowledge is more important than how much money you have. So I hope you guys enjoyed this YouTube video. Thank you guys for watching. If you guys want to see any more content, leave a like, comment down below any video ideas. I'll be loving to hear back from you guys, what you guys are struggling with, what you guys would like to learn. And I'm here to help as many of you guys as possible. Thank you guys for watching. Jerry Trades with SoCal Trading Group, over and out.